Welcome. We are very excited here to be here today and talk about what we see as the path to digital insurance 2.0. Very different business and operating model, as well as technology as compared to the last 20, 30 years. I'm very honored to have our panelist here, Donnas Gomez, who's the COO of Urban Advantage. They are an InsurTech MGA startup. And she'll give a little bit of background of her organization. And then Joe Griffith, he is the CIO of another startup, but it's a full stack insurer, Integrity Specialty Insurance. So a personal lines perspective and a specialty lines perspective as we kind of think about InsurTech. To get us started, I'm going to have a couple of slides to kind of set up what we see as what digital insurance 2.0 is. And then I'm going to turn it over to Dana and then Joe, and then we'll have a conversation with some questions that we've prepared. And I encourage the audience, obviously, to submit your questions as well. The first slide that I had that's up on the screen right now, this is really our view of what the difference is between Insurance 1.0 and Digital Insurance 2.0. We've done quite a bit of primary and secondary research, particularly around consumer expectations and small medium business expectations, and their inclination to be able to purchase products with different kinds of capabilities or different kinds of attributes. And as we look at where we've been over the last 30, 50 years, we've built all of our business models and our operating models, as well as our cost structures, around a set of business assumptions of what insurance products should be defined as a risk product only, around the traditional processes, and many of those different areas, as well as the generation of baby boomers and Gen X. As we move into the digital age, we have a different generation that has a different set of expectations and needs. We have a lot of technology that's starting to underpin new businesses. And with that, we have to have a shift to what we call Digital Insurance 2.0. And that fundamentally has a different business model. It fundamentally has a different operating model. And products are more so defined as both the risk product, the customer experience, and the services that are provided around that. Today, it's not just about the risk product any longer. And to really focus in on that, you've also got this next generation that are going to be your future buyers. And what we've sold and how we've sold in the past isn't necessarily going to work in the future with this next generation of buyers. So with that, what we see is this is a prime opportunity from a growth strategy standpoint. We've actually been doing a lot of optimization and efficiency and effectiveness over the last 30 years. Now it's all about innovation, but it's not just using technology. It's not just going out and using AI or using a chat bot. It's really fundamentally rethinking that business model. And our panelists are going to talk about that because they both come from an experience of having worked in traditional insurers and now working in InsurTech startups, and what they brought forward and what they wanted to do differently than what has been done in the past. So what I would leave you with is that this is one of the greatest opportunities, I think, in the industry that we've seen in generations. Because it really offers us an opportunity for new growth in unserved and underserved markets that have a lot of different kinds of needs that we have not necessarily been able to serve, and we can do so now in a digital type of way. So with that, I'm going to turn it over to Dana.
Good morning, everybody. My name is Donnas Gomez, and I am the Chief Operating Officer and co-founder at Urban Advantage. Just a little bit about me is I have, and I always love to say this, over 30 years experience in insurance. I know you're all shocked, right? You're like, no way. But yeah, 30. And I've worked for a major company, so I have the opportunity over those 30 years really to be in a lot of different functions, a lot of different areas. I worked in personal lines and commercial lines. I worked in all the distribution channels, so I've worked in captive, I've worked in independent, I've worked in direct. I've been able to work in underwriting, product management, systems development, sales, marketing, all those different areas. It's been was a great opportunity, great learning place, and a whole lot of fun. 5 years ago, I left that company and started my own company in senior care technology. So I had the chance to go out and be an entrepreneur with an old boss of mine at the company and start from the beginning when there's just two of you and somebody has to lick the envelopes and put a stamp on it and take it to the post office. From that place, starting that company, we had the opportunity to purchase another company that was in the senior care market, so we did that. Had the chance to grow both of those more than we ever expected, and then had the chance to start Urban Advantage. I'm going to tell you a little bit about the story about how Urban Advantage began, but that's a little bit of my background with a traditional major company. Oh, and I've got a slide up here, so cool. Our story at Urban Advantage actually begins at a birthday lunch. Our founder and president, Faye McClure, was invited to lunch by a group of Hispanic agents in Southern California that wanted to celebrate this milestone with her. During the course of lunch, as it often does, conversation got to the state of the industry for the urban agent in California. Much discussion about how things were changing with carriers, what they were asking for, their expectations. And the long short of it is the agents came up with a solution, and that was that Faye should start her own company. As the conversation continued of you should, really accentuating that what was needed in the marketplace there was somebody who understood writing in the urban markets, being an agent, independent agent in the urban market, and the carrier experience to actually do it successfully. So what the agents told us was that the increasing new business production, pressure from the major carriers that was dependent on keeping the commission levels that you'd always had in the contingency was really at odds with the product changes the carriers were making. They were increasing rates, they were shifting their algorithms, they were making changes to how discounts were applied and which discounts were applied. All of that was quite simply disproportionately impacting the urban community. So what they were finding was that they had profitable books of business that for years they had made money with, and they were making less and less revenue off of that book. What they were doing in turn to make up the revenue shortfall in their agencies is they were turning to the non-standard products that allow you to charge fees. None of them felt like that was what they wanted to do in their community. As one of the agents said, our customers deserve better. But you have to keep your business going. So that was really the establishment of what the landscape was and the call for us to do something different. Now, I heard an interview with Sarah Blakely, who started Spanx not too long ago. You're going to hear me talk about Reid Hoffman a couple of times, truly one of my favorites right now. And she talks about the magic of having a great idea or a big idea and timing. Now, Faye and I had talked about taking what we knew how to do, which was to write insurance in urban markets profitably, and going independent with it for years. We'd worked business plans, we had came up with ideas, creatively problem solved, and we really prepared on that goal for a very long time. Now we were finding the magic of timing. Faye was ready to leave her role as a senior VP over at AIG. I already had a flexible schedule because I was running my own companies. We had a market opportunity, and now we had customers saying, won't you please do something? So it was really a great opportunity for us. Now, we jumped a slide a little bit quick there, but that's okay. So we all know the vital role that insurance plays in a community. What we don't always understand is that it's not always readily available to each community equally. Banks do mortgages when there's insurance. Banks do car loans when there's insurance. Small businesses exist when there's insurance. There is an affordability and availability issue in the urban centers today. And that's the vision that we have is to focus on that area and to fill that gap. Now we can change the slide.
Got it.
So while we have the benefit of a starting group of agents that really what we call our founding agents or our foundation agents, we actually are blessed with a bigger opportunity than just that group of agents. When you take a look at California itself, the market is growing. So by 2020, the minority will be the majority in the state of California. 60% of the residents of California will identify themselves as either Hispanic, African American, or Asian. So we have the broader perspective of a growing market. Our commitment is to competitive and comprehensive products. Now, if you were to talk to the major carriers, or you ask them, are you in the markets, are you selling products to these communities, they would actually tell you, yes, we are. But when you deep dive on the products, there's most of the time you see less coverage actually offered in higher prices than what you would see in the suburban areas. So our commitment with our company is comprehensive and competitive products. And then there's the partnership with our independent agents. We do feel that the secret sauce to success in the urban market is selected independent agents that have a history of profitability and live and work in these communities. And then the last piece that we see is absolutely critical on us achieving our objectives is a culture of service. And that kind of ties in what Denise had just talked about of how we got to where we are with the systems that we implemented and what we've done so far. But a cornerstone of everything we do is service. Everything that we've evaluated from our partnership to our agents, to the systems that we brought to them, the products we're bringing to our customers, and the pricing that we bring is a commitment to bring them the best service that the industry has to offer. Nothing less, nothing substandard, nothing that says that your market isn't as valuable to us, but instead says that you're what we're after, you're the market we are all in with. The implementation stuff, I think the Q&A is going to cover most of that, so we'll probably hold out on talking about that too much. But we did make the decision to go with Majesco, and just as a teaser, we did start our blueprinting process in January and then began our development in March, and we went live with our first products in June. And yes, if you do the math quickly, that's 95 days, and we were live in the market, which is pretty crazy, still wrapping my head around that. So.
Good. All right. Joe, over to you.
All right. Good morning, everybody. I'm Joe Griffiths, Senior VP and CIO at Integrity Insurance. Glad to be able to be here today to tell our story. Similar to Dana, I've spent too many years in P&C and P&C systems. I've worked in roles as a vendor, in consulting, and also for a carrier. For a number of years, so I have a pretty broad range of experience. I thought I'd start out today first by telling you a little bit about what E&S is, and then about Integrity, and then I'll tell you a little bit about our digital vision, and then how we went about implementing it before we get into the questions. So lots of people ask me, what is E&S or what is specialty? So simply put, E&S is a specialty market that insures things that the standard market won't cover. Even simpler terms are, some people refer to us as the US version of Lloyd's of London. So all of us kind of know Lloyd's of London. The risks in our market are unique risks that are emerging, are hard to place, or require a lot of capacity. Some examples include things like, everything from a daycare center to, a multinational oil company, to a construction site, and anything in between. E&S is a significant market with over $40 billion worth of premium. The risks that are occurring in that market are always evolving because of world events that are occurring, or new services or products that come into the market. Unique aspect of E&S carriers is that we're non-admitted, so that means we have less regulation than our admitted counterparts, and so we can quickly change our rates or create forms and coverages to fit the type of risks that we have and to accommodate those difficult risks. So you can see that an insurer that is agile, can act quickly, and has flexible technology is in a great position to perform in this part of the market. Now, Integrity Insurance is a specialty company. We're based in Scottsdale. We plan on doing business in all 50 states. We'll go to market through the wholesale brokerage and managed and general agent channels. And we'll operate 2 underwriting divisions, one on the brokerage side, one on the contract side. And Integrity is differentiating itself really by executing on a technology vision to create a future-proof digital business platform that is powered by advanced analytics, deep learning, intuitive design, and state-of-the-art technologies. And quite honestly, our vision is to create the simplest, fastest, easiest insurance buying and servicing experience in the E&S market. So that's a little bit, oh, I skipped at the bottom there, just the way that the market, where our distribution channel in the market. So you can see as a carrier on the far right-hand side that we work directly with the wholesale broker and general agent. So risks come into our market from the insured through the retail agent, and those risks actually need to be declined 3 times in the standard market before they can make it into the excess and surplus lines market. So that's how the distribution channel works in our market. Next slide, Denise. So a little bit about our vision. You know, our strategy was to create a future-proof, cloud-based digital architecture that is quick and flexible and can adapt to changing business needs and deliver engaging customer experiences. And so to do this, if you look at the diagram there, what we've done is we've created an ecosystem of partners. And those partners can provide a broad array of capabilities to us as a service, very important word there, as a service, that we can seamlessly consume via the web. Now, at the center of that ecosystem, you'll see that there is a integrated core insurance platform. That's where Majesco actually comes into play for us. And what we wanted was a platform that had deep insurance functionality in policy, in claims, billing, EDW, and could process any line of business. And so by having that core insurance system in the middle of our ecosystem, that really gives us the ability to innovate at the edge. So at the edge of that ecosystem, we're developing a digital and data platform where we'll deliver differentiated digital capabilities and have the ability to plug in InsurTech components from the InsurTech ecosystem. One of the most important aspects of our ecosystem is that we insist all of the partners in our ecosystem to be microservices based. So any application that we create or that comes into our ecosystem must be microservices based. That allows us to easily exchange functionality via APIs and take advantage of associated benefits like ease of change, speed, and the ability to adapt to change and to scale. Data is, we're planning to exploit data as an advantage. And to do that, what we'll be doing is leveraging both private and public data and using that to enhance the data entry experience and do collection, as well as provide advanced analytics and sophisticated business intelligence. So next slide. So our implementation journey, we had very aggressive time frames for getting a basic set of capabilities out in the market quickly. And quite honestly, it put stress on all the partners in our ecosystem, I would say. But by having an engagement model where the partners, we could listen to each other and adjust, we were able to get our capabilities out there, and partners were able to adjust and be able to deliver for us. We really approached our implementation with three major areas. One was we wanted to launch our brokerage business, and then launch our contract business, and then set up our insurance operations, bringing on claims and billing and some of the back office type of capabilities. We launched in 10 weeks policy administration for multiple states and multiple products. We also got a foundational set of web services and microservices out there to support our interaction with partners. On the contract side of the house, again, another quick launch of a policy management system, this time with 4 products and in 11 states. And there we were maturing our microservices and creating some more sophisticated microservices. And now we're following with our claims and billing and the other insurance operations and building our data and integration frameworks. You can see that similar to Dana, our launch times were very aggressive, and it's been amazing that it's been in weeks rather than months or years. From some of the projects when I was in larger IT organizations. So we've had a great experience with our implementation.
All right, so questions of them, and I'd encourage you guys, we'll see some questions come up on the screen here, so use the app to submit any questions that you might have. Given that both of you have backgrounds in traditional insurers and the complexity of the organizations and the technology that they had, when you decided to be part of an InsurTech startup, what were the critical elements of consideration that you would give to this audience that are looking to have a startup, or in the case of maybe an incumbent insurer that wants to do a greenfield? What are the key things that you think really are the differentiating elements that are going to allow you to be successful in your business?
Go ahead, Dan.
Okay. Yeah, I think just an absolutely critical thing to stay focused on is what your strategic objective is with your company, right? What is your unique selling proposition? What is the mission that you have? How are you going about it? Because there is so much technology today, right? There's really cool stuff being at this conference this week. There's some really amazing things, and your head can go every which direction. But when you're a startup, you've got to be very strategic about what is the technology that's going to be necessary for us to actually achieve the objective we're after. So for us, one of the things that we were completely focused on was that technology had to be something we could leverage to reduce our expenses. So we knew that going into a business model in which we were going to be focused on relationship, that we wanted to pay marketplace or above commissions, that we wanted to have a strong contingency and reward program with our agents, then we were going to have a very efficient operation in order to have that revenue available. So we knew technology solution had to really help us with the expenses. The other piece is that we knew that it was critical to come into the market that we were after with table stakes technology. So we had to make sure that we were focused on that. So I just see that over and over there's a lot of really great technology that can send you off a direction, but you've got to hold true to, particularly as a startup, generally speaking, you don't have all the money in the world. So what is the technology that's going to help us get us to the next stage in our business? And then as each stage goes on, you can add to it. But that alignment, really staying really focused on what it is that you've set out to do and what's going to make your company successful, making sure your technology is an enabler to that success and not something that you just have fun with.
Joe?
I would add just a couple things. I'd break it down between incumbents and InsurTech. So as an incumbent, it's important to have a flexible business model that will enable your organization to take advantage of digital opportunities. And if you're an InsurTech similar to Dana, then it is making sure that you know who your customer is, what market you're going at, and the value that you plan to provide for them. For InsurTechs, I can tell you one of the things that I'm looking for is that you can easily fit into my ecosystem and that I could fit you in without even your UI, that I could access your functionality through my UI. So what that means is really equipping your products with granular RESTful APIs that are built on microservices. And it's amazing the companies that we talk to that really, everyone says they have an API, but when you really get down to it, they're not granular or they may not be RESTful. So being able to access that functionality through an API is important. The other thing that I would add out there for InsurTechs is that it's not all about the technology, and they brought it up in the session this morning that having business acumen is very, very important, and being able to understand our markets and how we transact business in our market can be a real value. I would say as an incumbent, the other thing would be create a culture of thinking and executing like an InsurTech, and then you cannot be encumbered by legacy and technical debt in your organization. So if you're not on a platform that lets you really take advantage of digital capabilities and of the InsurTech ecosystem, you need to figure out how you get there fast, either through a greenfield or through executing on a strategy to get to digital 2.0.
Yeah. One of the things that we talked about when we were prepping for this, and you hit on it a little bit, Dana, and obviously in the specialty market, it very much hits on that, is that a lot of times as an industry, we've gone after the same market segments, you know, competing for the auto insurance or competing for homeowners or competing for life insurance, whatever it may be. What you've each kind of identified are really segments of the marketplace that have been underserved or unserved, and trying to find a different way to really reach them with innovative types of products that are going to meet their unique needs. What advice would you give to people here that are, you know, thinking about standing up a model, and how to maybe kind of look at that rather than an all-encompassing product? It could be a set of different kinds of products that are going to go out there addressing those unique needs. Joe, do you want to start?
Yeah, I can start. In our particular situation, you know, I wouldn't say that we had underserved or unserved markets. That there's lots of capacity in the markets, and as I told you, risks are evolving constantly based on micro and macro trends. So, you know, we were in an excellent position that our senior leadership team is a group of leaders that had deep experience in our market and had worked in other companies and could easily give us insights to tell us what lines of business and what classes of business we should go after within our market. So we were in a good place there. From a digital, the other piece of that too, and kind of back to the business aspects, is relationships are still very, very important in our market, and I assume in other markets too. But you know, where those relationships help drive us there, and where we have underwriting talent. In our type of market, these are very complex risks, and so having underwriters that can truly know how to underwrite those risks was very important. From a digital model perspective, what we're doing is differentiating on technology that is untapped within our market segment. So doing it in a different way with that ease of use that I talked about, pushing down the value chain and using data.
Okay.
Yeah, from our side, I already shared with you that our company got started out of requests from the marketplace of saying that conditions are changing and we're creating a gap here, and there's an opportunity for somebody to come in and do something different. But what we see in that is that in so many places, your major carriers will take a mass marketing approach. So quite simply from the insurance side, as we've gotten farther and farther along in the algorithms and the black box rating and underwriting, they're just by virtue of doing it off of the numbers, you create gaps. And the opportunity to identify where that gap is and exploit it, I think is critical in any startup that you're looking to do. We did a lot of work, so from our founding agents, we heard from them what the initial need was, and then we put substantial time into market research. We did lots of focus groups. We went out and we met with agents and made sure that we really understood what the gap was that they were experiencing. And then we took a very flexible approach to as we started launching the product. I've spent a lot of time out in the agent's office, all of my team has, all of our operation has, and we really hear from the agents, this is what we need. So Majesco has been very, very great to work with, and I think we'll talk a little bit about what the implementation process is at Majesco. But being able to go out with something that you didn't have to say, well, we worked on it for 2 years, this is exactly how it is, and now you all have to live with it. Instead, we've said, here's what we have, this is what we think is going to work, how's it working? Give me feedback. Oh, that's not working well? Okay, I'm going to change that. Oh, this referral role that I thought was going to be great, that's not working, it's stopping everything you're writing? Okay, let me make that change. And it's just been a very dynamic, in the field, working with the agents, getting market feedback. And I think as a startup, you've got to be focused on making sure you really know what your market needs, not what you think they need.
Yeah. So that gets to the next question, is that both of you talked about the rapid implementation, and you really focused on a minimum viable product that you could get to market, and to your point, test and learn, and get that feedback, and then adapt it as you go. That's a very different kind of model than what we've had over the last few decades. But it's a model that I think customers are expecting, let alone agents and brokers. So let's talk about that a little bit more as to why you really kind of put that pressure on to create that minimum viable product, and your approach to that, adapting it in that test and learn a little bit deeper. Joe?
Yeah, not a lot to say there other than by taking that minimum viable product approach, it allowed us to launch into the market quickly, to really accelerate our launch. And, you know, like both you and Dana have said, you know, get a product out there and then continue to innovate it. You saw when I went over my implementation approach, I wanted to get policy type capabilities out there where we could do rate, quote, issue, do policy maintenance. That was key to start getting the revenue going in. And then following up then with releases not only of insurance capabilities, but of digital capabilities through our agent portal and our digital and data platform too.
What did you learn in a couple of the first initial launches in that test and learn environment that you adapted differently?
Yeah, well, so you take to get to that MVP, you make a lot of scope decisions. And so it's like, did we make the right decisions of that we're not going to have, inland marine yet, or we're not going to have crime endorsements yet. Those are going to have to follow. And so it's, really, were those some of the right decisions or not? And I think that we did make the right decisions when we look back. And then, what you think is the most important next functionality to come out changes too. You learn that we thought that was going to be important, but now we're getting feedback that says something else is a priority.
Dana?
Yeah, so the minimum viable product, if you've been in technology for a while, that's a tough one actually to move towards. I was spent years in a culture where it had to be perfect the day you launched it, and any consumer, any end user complaint was like, your job's at risk here. It was a crazy environment, and to be in an environment now where you, I'm going to go back to my Reid Hoffman quote here, that if you're not embarrassed by your first product, you waited too long. That's a big mind change for somebody that's been doing this for a while. But what I found is by shifting the paradigm and saying we don't have to be perfect on day one, we can actually put it out there. Well, even back up a moment. So Majesco's implementation process is very strong on prototyping. Absolutely love that. It was outstanding. So as you've gone through this blueprinting process and you move to prototyping, you've really worked through that a ton. And then you go to minimum viable product. And that's where your end users are actually really touching it. And being able to be nimble enough to say, okay, we're getting this feedback, let's make this change. And turning it around in, a 4-week cycle of agent feedback is that this is what we need. Getting it back out to them in 4 weeks is critical. Now, there's a ton of management, of course, that goes through making that work and not breaking everything that you've already done. But it was a strong mind shift change for me, but one I absolutely support. If any of you have gone through the insanity of how long it takes to put a product together that's perfect on day one, this just gets you in the market so much faster. And the other thing that's happened is there's been enough technology into the marketplace that we didn't find that our agents expected perfection on day one. Actually, when we went out to them and said, this is our beta test, right? You are the select group that gets to try this first. And if you give us feedback, I'm here to listen, I'll make those changes. They had a greater sense of partnership with us and commitment to us because they felt like they were involved in that solution.
So that was the next area I was going to go to. Both of you are involved with agents and broker channels, to be able to kind of distribute your products. And we've often heard, the channel's going to go away, but it really still serves a very strong need. What has been the feedback from your agents and brokers with regard to your rapid implementation and your ability to kind of rapidly adapt to what their feedback might be and their use of the technology? Because it's obviously a little bit different than maybe what they've had before.
Yeah, I would say our wholesale partners are excited about the business model that we're putting out there and the capabilities around integration and ease of use that we're building for them. A matter of fact, some of them are so excited they want to join us in that journey and really help us redefine how the business process could work from a digital first perspective. And so we're getting more and more of them engaged in, what does the future look like for us?
Dana?
Yeah, our agent feedback has been very positive. We distribute through independent agents that live and work in the urban communities of Southern California. So they have retail storefronts. They have customers that are in their office that are sitting there with them that have came in, and we have a point of sale system with Majesco, so there's actually straight throughput there. So with the customer sitting with them, they can do the quote, the customer can say yes, and within 10 minutes, they're actually, either emailing them the PDF of their full policy document, or they're printing it out, handing it off to them, and they're walking out of the office with the policy documents. The agents absolutely love that. It's one and done. What business doesn't want an approach like that?
So one of the things that we also talked about was the partnerships. And Joe, you kind of hit on that a little bit, with an ecosystem of partnerships. As you look at this shift where we used to be vendors and now we're kind of partners, there's kind of a different management and a selection process and kind of thinking through the types of partners that you want to do business with. And it truly becomes a partnership. Why don't you both kind of give your perspectives of where your thinking has evolved in kind of selecting partners that you're doing business with?
So I'll go first. So you hit on it. A collaborative partnership is very important, especially when you're working in an ecosystem. The other thing we evaluate is delivery capability. So, can they deliver with speed and with quality? Back to business acumen, what experience do they have in business in our area of the market is very important to us. And then choosing partners that really have that vision, are future focused, and that we know are going to continue to invest and evolve their products is another criteria that we use when we evaluate partners.
Dana?
Thanks. So same thing for us. One of the big pieces when you're a startup, you are as lean as you possibly can be, right? So, but there's skills and there's work that has to be done. And if you have a small team, we had a very small team like everybody else. We started with a larger sales team and a pretty small back-end team. Work just has to happen. So if you're not going to hire it on your side, then you've got to have the expertise on the partners that you're working with. One of the things that I find in vendor selection, and we found it kind of over and over whenever we were working through this, is there's a lot of presentation of price whenever you're doing a system evaluation. And one thing I've absolutely learned in the years of doing this is that there's no coupons for system implementation. If somebody is substantially cheaper than somebody else, they're not doing something. And you've really got to know what that is. And often, it's the things that they've shifted to you to do. And if you're a startup and you don't have the staff for that, then you're just out of luck, right? It's just a crazy thing. So we did not want to, we didn't want to have to build a business analyst team. We didn't want to build a technology team. We didn't want to have to build a training team. So whenever it came to vendor selection, we were looking for a vendor that had enough insurance expertise that they could be the BAs for us, that they had absolutely a service model that they could truly be our IT partner, and that their technology didn't require complex training, that within the technology native to it was help text that would guide our users. So a little bit different than in the prior systems I would have done at a big company. Here I was very cognizant of I wasn't building a massive staff and department to do this. I needed to make sure that my partner had those resources.
We don't have any questions on here, but before I ask my final two questions, I'll just see if anybody has a question they want to pose from the audience to the panel. No?
Was it a greenfield approach, or did you adapt from your current technology?
Clarify that a little bit. But
I mean, did you start, when you did your digital approach, did you start from scratch?
yeah, absolutely. Yeah, brand new. Thank you.
Okay. So my last question is, one of the last questions is that we've heard sometimes that some people think that this whole InsurTech thing is kind of a bubble, that it's, it will just kind of go away, and everything will go back to normal. I'd like to get your both perspectives, having been very involved in the industry for years, but also now as a startup. What is your view over the next 3 years, both for the industry as it relates to InsurTech, but also for your businesses? Dana?
Well, I think that what we see right now, and I think that this will continue, is that there's not like this huge wall that sits between, the regular part of my life and technology and the technology whenever I come to my insurance job. The technology that's happening in the, in the culture and the society, the simplicity of it, the knows me wherever I go approach, that expectation is moving into the insurance side. That's not going to change, right? So there's no oh, it's insurance, it can be old school. No, it's definitely going to have to continue to keep moving. I do think that one of the pieces that's different about InsurTech, and this could just be I'm an old insurance person, is that insurance is highly regulated. You can't just run for years and years and years, lose money. Regulators shut you down eventually and say you can't write another policy. So I do think that that need to be profitable in how you approach a market will get clearer and be more obvious as the next couple of years go on. We've seen some companies come in and say they're going to disrupt the market and do something very different. And what they've brought is a technology that's exciting, but they've completely thrown out the discipline of underwriting and making money on the insurance side. And if that was all you had to do was do new technology, the old established companies would have done that years ago. But
Okay. Joe?
I think near term that we'll continue to see innovation and that we'll see some accelerated innovation in some pockets, and that companies that really think and execute like an InsurTech will provide greater success than maybe their counterparts. In three years, I think there are some incumbents that will have some breakthrough products. And I think we'll see some InsurTech start to disrupt the market in our area of the market.
Good. All right, so final question. What would you give as a final piece of advice to everybody here as they're going to spend the next day and a half going to all the different sessions and visiting all the booths and networking with everybody? What would you give? Joe, I know you guys were here last year. A year later, you're now out there in business. What would you give to people? Let's start with you.
Well, so, we've come and we have certainly an agenda of, some things that we want to assess ourselves, especially in the data space is what we want to get out of it. But I think the advice I would give would, be open to listening and be curious about, what is out there. We had at the bar last night, we ran into someone that had a product and we were brainstorming, and all of a sudden we figured out, wow, how that could fit into our market, and we're actually going to have them do something small for us. And it's those types of conversations that if you're just engaging and really open to listening, that you can have some breakthroughs like that.
Good. Dana?
Well, from a startup standpoint, I guess I have a couple of things. One, and I've already touched on them, as I think focus groups are critical. Make sure there's a need for your product. Really, really talk to your end users and your customers. Understand what the gap in the market is and what you can fulfill. Make sure your technology is an enabler to that vision, that objective, not all that you are. Even if you're just an InsurTech company, you still have a problem you're solving. Make sure you know what that is, because you can get off track if you're not working those two pieces together. Then on the insurance side, development is king. Pick a process, be obsessive about it, follow it, don't deviate, because when you do, you end up with a product that you love and your customers don't use. So, and I guess the last one, just as a startup comment, this is my third Reid Hoffman quote, and if you don't know him, you should pick up some of his stuff and enjoy it. But as we were going into this, I had heard a podcast with him, and his line is, "Let the fires burn." And as an old operations person, that was you're geared to, you don't go home until the fires are out, right? You don't stop until you've got this issue solved. And with a startup, the talent, the key, is figuring out which fire to put out and which one to let burn, because we are blessed right now that we've got a great front-end technology. Lots of exciting things are happening. We had plenty of things we moved to day one. Day one's not actually here for us yet, as in building our back-end operation. So we're buried in business and things are burning, but it's all really good. So
good. Well, please join me in thanking both Joe and Dana for their insights. Thank you.